trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, without further ado, I'd like to introduce our good friend and market technician par excellence, Mr. Bill Meridian of Cycles Research. Bill, welcome to the show today. What are you looking at today, my friend, with this lack of volatility?
I'm trying to get the new headphones working.
Good.
Okay. Can you say something so I know whether this is... Hello? Hello?
Yep, you're coming in fine.
Yeah, but the headphones are not working.
Well, I hear you good, so you can just use whatever you're using now, I guess. Bill, if you're asking about technical help, pal, I'm so far down the petting line on this that I'll never be able to answer those questions. Hey, Bill, just for a second, do you remember 25 years ago we were giving a seminar, Astro seminar over in Singapore, and you and I were speaking about what was going on? Did you ever think in your wildest dreams that we would be seeing volumes like we're seeing in some of these commodities and stuff, plus the volatility that we're seeing? I never would have expected that in my whole life.
Yes, I know what you mean.
Okay.
Okay, I cannot get the headphones working, so I don't know what has gone wrong. I had it working before you called. Anyway, can you see my screen?
Yes, sir. We see the screen perfectly.
Okay, well, first of all, the Foundation for the Study of Cycles, June 12, 14, we will be live in New York City. Go to cycles.org if you'd like to come by. And for market cycles information, I'm at cyclesresearch.com. And if you're interested in planets, then I have a new website at billmeridianastrology.com, which answers questions people have been asking me for years. So this is a summary. I've got, well, first I'll show you Bitcoin, I think, is going up. Stock market cycles, I think we've entered a bear market. Gold to enter a trading range over the next couple of months. I think it's already started, and then run higher. I look at bonds up and oil down. And what are the prospects for a bear market? Now, way back in November, that should be Stan Harley, not San Harley. It makes him sound Chinese. Richard Mogi took stock market data back to 1600. I think he started with Amsterdam, and he wove it all together, and he gave one copy to me and one copy to Stan. Stan did his time counts, Lucas numbers, Fibonacci numbers, and he said that there was a major high in November. Now, of course, when you're looking at data that's that long, if you're off by 0.5%, it can be a year. But anyway, that was the first thing that got me, because as you recall, I have been presenting the data from the auction markets, and I thought the buster was Juan Soto's baseball contract with the Mets, where he gets about, I think, is it $80,000 every time he walks to the plate? So that's what I was worried about. And then the second is from another friend of both yours and mine, Peter Eliades, that point to the number of days from the December 74 low to the 2000 high. You take that time expanse, add it to the 2000 high, and you get February 2025. So those I had in the back of my mind, and plus that, I'm an advocate of the 54-year cycle. 54 from 2025 is 1971. That was the beginning of an era that we remember, because nobody expected it, of higher commodity prices, stagflation, which is a word you're hearing again, and a much lower stock market. The market went from late 60s to December 74 down 50%. And as I said before, I'm driving in New Jersey in Christmas 74, and there's a sign that says stay alive in 75. So the fundamentals are different now, but I keep this 54-year count in mind. Then it is also 5 years from 2020, something else that I was concerned about. It's also 25 years from the 2000 top. So, and the excess, as I mentioned, the guy paying the $1 million for the banana art that he then ate, Juan Soto's contract. And contrary opinion here. Sentiment, as we're going to see, is very important. Traders have been buying as the market has been falling. In fact, the I didn't check AAI sentiment numbers last night, but they were getting more bullish as the market fell, and that is the sure sign of a bear market, and I'll explain why. Now, and don't use inverse funds, I just added that. A friend of mine who's over 80 years old moved his managed accounts over to Morgan Stanley a few years ago. And he called me up and he said, guess what? I said, what? Beginning of the year. They have forbidden us to use inverse funds. In other words, like the SDS and the QID. And he said, how am I supposed to protect clients' funds when the market goes down? Oh, the market's not going to go down. That's the type of thing that happens at tops. And that was Morgan Stanley. So anyway, here's the Bitcoin monthly cycle. I don't have much to say about Bitcoin because I don't look at the fundamentals. I don't have any sentiment indicators. I'm sure some are developing now. But I think that potential gold buyers are going to look at the price of gold and say, hey, I'd rather buy Bitcoin down here at 80-something thousand than buy gold at over 3,000. And to go back, for those of you who hadn't heard me before, we had two big rectangles here, green and blue. And the one, if you get a breakout, the price target is set by measuring from the low point to the high point of the rectangle. So the blue rectangle pointed to 6,100, the green rectangle 6,200, and we got right to the middle of that. So that's when I turned cautious, thinking there would be a 10% correction into the end of March. But it's been the fifth fastest 10% decline in history, and it's gone much farther than I thought it would. So now here's the S&P 500 daily, and I just put this together last night. And what we know from Elliott Wave, nothing about Elliott Wave. One drop like that, one move down cannot be the end of the move. It's got to be ABC or 1, 2, 3, 4, 5. So that was a big A wave, and then the B wave stopped exactly here, almost at 38.2%. The NASDAQ indices just got there and turned south. And now you're in the C wave decline, which we're probably at the end of that arrow in a couple of hours. So here are the price guides. This, I think, is the most important thing.
So we've got to pay for the bills, folks. Stay with us. We'll be right back with Bill Meridian.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
We're back, folks, with Bill Meridian, Cycles Research. Please continue, Bill.
So the S&P fell from February 19th to March 13th by 622 points. That was the A wave. If this is an ABC correction, then there is a relationship between wave A and C. If wave C is 1 times A, then the S&P hits 5165. If it's 3.28 times A, then it reaches 4927. And the most typical is 1.618, then it reaches 4781. Also note that 5120 is also a 38.2% retracement of the entire October 2022 to February 2025 rally. So if it exceeds that 38.2% 5120, then that means it's not a normal correction. You're going much lower. And I think we're probably there right now. I can't see the screen at the moment. So news in the markets. I pay little attention to the news because I grew up in New York and went to school there. And in graduate school, any studies that we saw assigned a coefficient correlation of 0.3, that's a range is 0 to 1, to news and stock market reactions. In other words, it's low. And in fact, the stories that got the biggest movement in the share price was stories of the health of the U.S. president. So some studies suggest that bad news in a down move exaggerates the decline. That's what I believe. So wave C equals 1.382 of wave A can become 1.618 of wave A with bad news. And if you've worked in New York and been around the financial media, they sit there with a bin of good news and a bin of bad news. So when the market goes down, they reach for the bad news. When the market goes up, they reach for the good news, so that you think that there's a direct association between the news and the market movements, which it probably isn't, but that's how they make money, getting you to believe that. So tariffs are being plucked from the bad news bin, and I think they're making the decline a bit worse. So here we go again. This is the market histogram for the Dow Jones from 1885. This is the likelihood in red that the market will go up in that month, which was 80% in January. And this is for all years ending in 5 that are also post-election years. There have only been 6, so not a big sample. But here's one of the reasons I was bearish into March. It was this. But April, there should be some recovery, which there may still be. But as you can see, the rest of the year, particularly the fourth quarter, is bullish. But I don't think so now, but I still think Q4 will be up. And here's the old 1-4 10-year cycles, which you can see the red is the 1-year cycle, the green is the 10-year cycle, the blue is the 4-year cycle, and that is a summary. And as you can see, also a low in March. This is why I was looking for a correction in Q1, these two cycles. And there's the 1-4 10-year cycle in Q1 blown up, and here it is for Q2. So according to this, we should get a rally sometime here in April, probably not from later April. I thought the low might be yesterday, or today, I should say. And then a decline into June. Now, June's a bearish month anyway, and the way it looks right now, it's going to be very bearish. So I'll go through this pretty quickly. Years ending in 5 are the most bullish, and years after the elections have had the worst returns in the 4-year cycle. In that contest, years ending in 5 win, but we had 2 years 20% growth in the market. After other years where we had 20% and 20%, the next year was in the 10-12% range. And bullish sentiment has been at a high in 2024 for the second year in a row. In subsequent years, the market has been down, but the market has not been down, but the gains have been reduced. And here's the December effect. December was down, which caught me by surprise. It was very unusual, and you can see here's December up, December down, and you can see it's a 61% probability of the market being up if December is up, but if December is down, it's 55%. And we did this for the Dow from 1885, the S&P from 1928, NASDAQ comp from 1980. You could see a down December really dampens the market. Sentiment indicators. I said I would talk about this more at the beginning. They work with contrary opinion. If there are too many bears in a bull market, the market accelerates. But in a bear market, the bears are correct and the bulls are the minority. If sentiment is bearish and the market continues to fall, then it is most likely that a bear market is in effect. Here is a sentiment climate from several different perspectives. The AAII sentiment poll, which is released on Thursday nights, rose from 19% bulls on March 15th to 27% bulls on March 27th as the market was falling. Investors became more bullish as the market fell, in other words, buy the dip. When this occurs, the market moves lower to shake out the last of the bulls, and that's what I wrote over the last weekend. So here we are. The sentiment for newsletter writers is bearish, and I think this chart is 1 or 2 weeks old. So in other words, they're not up here, they're down here, and it's still declined. That's a bearish indication. And sentiment mixed short term. The retail investors, retail buying, look at that, it was going up as the NASDAQ was falling. That's another these are very big negatives. Now this is one of my favorites. When the number of hedge funds, here's the number of hedge funds in 2010, and what is it now? About 10% of what it was in 2010? And this chart is a year old, I think. So what do hedge funds do? They time and they can go short. Well, if they are declining, it tells you you're going to need market timing because you're running into a very volatile situation, which is what we have. So this is, if you flip this upside down, that's the demand for market analysis. It's growing right now. So, and here is Sentiment Professional, CTA positioning in U.S. equities. Look where it is. This is the professionals as opposed to the retail public. So these gaps in sentiment, as I call them, these are also very bearish. And here's the people, this is a University of Michigan poll of the public, the expected change in financial situation in 1 year. And look where it is. Down here, which means it's probably very bullish for remember, this is change in financial situation in a year, not necessarily on the markets. So it's probably constructive for the economy. And the big change was I thought the correction was going to be centered in the big cap technology stocks. The market would come down 10% by the end of March, but they'd be buying in other technology stocks and buying in finance. And we've seen the DAX has risen, the foreign markets are up. So I did not expect a decline of this magnitude, but I still stick with this. I still think there are certain technology stocks as soon as we bottom out that you want to buy, but I think obviously the Magnificent Seven are not those.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
We're back, folks, with Bill Meridian, Cycles Research. Please continue, Bill.
Yeah, well, this is the relative strength screen for the sectors from November 1st. You'll note that financials number 1, technology's 5, and energy is last. Now, here it is now. technology is dead last and energy is number 4. This is what I was, something like this was what I was expecting. Healthcare is hardly moved, and financials are getting clobbered now, but over the short term, but I think they'll do well the rest of the year as well as utilities. So NASDAQ seasonality, well, that's not much help right now. So cycles research stock screens and cycles. Cycles plus seasonality plus relative strength equal profits, which is what I've developed between Value Line and Abu Dhabi Investment Authority. This is my screen of the relatively strongest stocks as of the close yesterday. You'll see Philip Morris number 1, ATT. Do you see any technology here? No. Well, Lumen Technologies way down at the bottom. And now let's go to the weakest end. Right here, there's Arista Networks, Moderna, Western Digital, Microchip. Note where all the technology stocks are. And by the way, the greatest use, I send out a monthly report that lists all of these for the S&P 500, Dow, and the NASDAQ, and the single best performing part of that study is to be short the weakest S&P 500 stocks. These stocks have declined, this group, this bottom 50, whatever the bottom 50 is, of course it changes from month to month, it's down about 50% despite having a rising market since about 2020. So these are the weakest stocks. And some of these are down already, but some of them have further to go. Like, Target, it's hard to see, and I was short for the longest time. Where is it? I just saw it a minute ago, and now my eyes are off of it. Illumina, ILMN. This screen says it's still going lower, but I covered my short in it. So now this is the S&P 500 monthly cycle, and I was expecting what was happening now to happen out here. I was expecting what is happening now, I expected would happen in Q3, sort of May into June and July. It just hit early, but I'm showing you the cycle anyway. Now, 10-year notes. This cycle is rising, and on top of that, I keep a sentiment indicator that is calculated in the following way. You take the open interest on the puts and divide it by the open interest on the calls on the 10-year note. Now, if that rises, it's open interest on puts. If it rises, people are writing a lot of puts, which means they're bearish. You have to read it in reverse, do a put call indicator. And if they're writing lots of calls, they're expecting the market to go down. Well, that's exactly what they're doing right now. And as notes rise, they're writing more. So this is the reverse of the sentiment situation we have with the stock market. Notes are rising, yet the option players are still bearish. So I would not doubt that we will have a high up here sometime in May, late May. So it looks very bullish for the notes. And here's the notes annual cycle. Well, look at this. Look at the month of April. That's, if we read the red on the right, that's 62% chance of being up. Look at the return is a little over 3%, so the expected return, which is the product of the other two, that's very high. May is sometimes weak, but this is certainly does reflect what you see in it reflects what we see in the put call numbers and in the cycle. Now, oil is in a favorable time period, but it is getting clunked. Now, when you see, there's an old saying, Larry, that I'm sure you know, when a very reliable buy signal or sell signal fails, double up your position in the opposite direction. Well, this seasonality, this is up about 70%, oil from like February low up till the April high, yet it's declining. Why is that? Well, here's the oil cycle. I haven't changed this at all. I ran this last October and November for an annual forecast, and I didn't believe it when I saw it. I believe it now. Oil's now, as of today, is down here somewhere. It's in the low 60s. It's off the graph.
Yeah, 61.
Dynamic cycles are stronger than seasonal cycles. It's best when you get them both pointing in the same direction. So the bullish seasonality comes off here at the end of April into May. So you're going to have this plus this seasonality worsening. So when I saw this and I saw the results of the election, I said, well, the next administration is going to take away all the blockages to extracting energy out of the earth, which had been erected by the previous administration. And so I guess that is what is happening. And this is extremely, of course, bullish for the economy because it will reduce costs. It's not favorable for my friends in Abu Dhabi. And here you have, this is a weekly, and you see what has happened here today. It's gone right through that support line that goes back to 2021. And here it is on a monthly chart. Now note, I circled, this is 50% of the entire rally from 2020 up to 2022. That's the bull market, and 50% retracement. It's gone right through that. It's down now here at 61, right where I'm pointing. So this is exceptionally bearish, and it confirms this. So the cycles lead, but then you have to have confirmation when we have it. And here's my other favorite. Rectangles are very reliable. Even the Financial Analyst Journal, which is the guys with the white shirts and the PhDs, they agree. They did a study using fuzzy logic, and rectangles are the single most numerous and the single most reliable technical formations. So gold broke out, and you take the height of the rectangle, add it, and you get $3,100, which is where my forecast came from. So what happens when it hits 3,100? Well, here's the cycle, which I haven't changed very much at all, and shows it peaking in about a week or two. So it's hit 3,100, and I once said to Arthur Merrill, Art, what's more important, time or price? He said, well, I guess price. So it's already hit 3,100, 3,150 in that area. I think it's down today. And let's see, I've got, there's the longer term cycle. So you see this area in here, I'm calling this a trading range. It's probably going to last into June. And after that, that's that little trading range. Look at this. This is the strongest time of the year for gold. So here you have the dynamic cycle pointing up, and look at the seasonality. And this is look at these are very strong months.
Gonna pay a few bills. Stay with us with Bill Cherubi, folks. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hey, we're back, folks, with Bill Meridian, Cycles Research. Bill, someone keeps asking me, I keep referring you to Bill Cerubi and Bill Meridian. You used Bill Meridian because of the fact that there was a discrepancy about they didn't want you to be publishing astrology. Is that as I remember it? I've known you 50 years, but I can't remember the reason behind it.
Well, I was at Payne Weber in the late 80s, and we developed the Astro Analyst program, and we wanted to market it. But according to all their rules and regs, I had to go tell them what I'm doing, whether blah, blah, blah. So I just put a different name on it. And to get them, if you want to write a book, you've got to clear it with them and all this nonsense. And it's Meridian is neutral to most people, but means something to astrology people, and it sounds better than Bill Pluto or Bill Jupiter. Okay,
Very good, Bill. Good.
Speaking of planets. Last Sunday, Neptune entered the sign of Aries for the first time in 164 years. And here, this is the actual, that 0 point is the last entry of Neptune into Aries versus the price of gold. There's only one in 164 years. But it adds to my case that gold is either going into a correction or at least a consolidation. But I don't think you'll see this anywhere else because I don't think anybody else has gold prices daily going back to 1860. So if it worked, as Arch Crawford and I used to say, if it worked the first time, then it must be true. And anyway, Cycles Research, this is a blatant capitalistic advertisement. At cyclesresearch.com, ranked number 1 for market timing in 2002 and 2016 by Timer Digest, an independent rating agency. They are no longer in business, and when they closed up, I was ranked number 3 in stock market timing over 19 years versus 170 services. And according to them, CR Signals kept investors 200 to 300 basis points over the S&P 500. I was also an advisor for 10 or 12 years to one of Wall Street's greatest traders, Frankie Joe, from the 70s into the 80s, and I was a fund manager at Abu Dhabi Investment Authority. So if you are interested in what I'm doing, you can go there. But now we're going to look at how it worked out. There's Tesla, doesn't show, well, there's the Tesla cycle. But you can see roughly this caught it. And you'll note how, even though it's down right now, so this is, if we get any kind of a recovery, this is a stock that I would buy. This is one of the stocks that I would buy because it didn't really keep pace. It started to weaken for political reasons and was not keeping pace with all of the other big tech stocks. And here's one I would not buy. And back in November, I published this. NVIDIA was on the cover of Barron's, and I put this up. It was in Forbes, and it was also on LinkedIn. And somebody wrote in and disagreed with me, a fundamental fund manager, who then commended me later on for catching this. And you'll note that we had another drop into here. And now look at this. This doesn't really bottom out until later this year, sometime in the autumn. So it's been a big bull market for NVIDIA, but I would not be a buy. I think this will remain a laggard, but Tesla will be a leader when technology recovers. And here you have NVIDIA. Look at this. Look at how overbought this is still. And there you have the declining relative strength, and it's extremely oversold weekly. But look at that big, it looks like a top formation. So, these projections, by the way, can be done on anybody's portfolio. This was made on the November 7th show, Larry. This is Grinder, which I did very well in last year. It was my best performer. It is the social dating website for the LGBTQ. Don't want to leave anybody out. And it showed, so I bought it at 8 and sold it around 18 or so, 18 or, here it was 14 and a half. And how did it work out? Well, here you had, but notice how it's bounced back. So this is another stock I want to own later in the year, or whenever the market bottoms out. So these can be run for any portfolio, for the S&P 500, the Dow, or anything else that you can come up with. And of course, Ed Dewey's book is available again from the Foundation for the Study of Cycles with a fancy cover, Cycles and Mysterious Forces That Trigger Events. So that's what I think.
Wow. Bill, do you think we've had a big liquidation here, but it's not really been a crash where they've put in the limits that they have, the trading limits?
Yes.
Do you think there's a possibility that could happen in the next 6, 7, 8, 10 days?
Yeah, I think it might. And the fundamentally, as I said, bad news will make seaways very long. That's the one thing that is hinted at by all the quantitative studies I read. And it was exactly 45 years ago that the Iran-Iraq war broke out. And I understand there were the U.S. just sent a second carrier to the Gulf. And I understand from friends in the UAE, there's an arms buildup. So it looks like they might strike Iran and put in, as long as the Trump administration is doing everything, they might as well do everything at once. So I think that could cause a real sharp sell-off. And that might be a low.
Okay. We have a question from one of our listeners, Bill, and that is, do you use the Donald Bradley model in your cycle work, or is it, I know you and Alfie and those guys did such esoteric stuff, but did you use any of the Bradley model stuff in your research?
If you go to BillMeridian.com and go to articles, there's an article there called The Bradley Indicator and Why I Do Not Use It.
Okay.
Because Bradley never stated how long, over what time period did he develop his data. I presume he used the Dow. It worked for the 3 years after he published the book, then it stopped working. And how did he come up with the pluses and minuses that are bullish and bearish? Where did he come up with the numbers that he assigned? And I think it was sort of done by hand, and then it burnt out. And I laid a sheet out here. I just noticed it over to my right before we finish up here. But there has been in space what we call a planetary cluster, which began on March 9th and ends today. Planetary cluster is a term invented by Neil Mickelson in his great book, Tables of Planetary Phenomena. It is not a conjunction. It is a pi wedge. It is 5 planets within 30 degrees. And this is the longest such planetary cluster, or PC as Arch and I used to call it, that I have seen in years. And conjunctions are mostly highs in the stock market. And so this was a warning, but the last time I used it, it occurred in June. And of course, the market's usually down in June, and I went with that and it didn't work. So anyway, it is done today, but you might be reading in the popular press about a lineup of planets. It's a planetary cluster. It is 5 planets within a 30-degree pi wedge of space. So it is ending today.
Wow, that's interesting. Are there any lunar things happening here in the next few days?
I haven't looked at that short term, no.
Okay, well, this is great information. Hey, I want to thank you for joining us. It's always great talking to you. And I certainly hope. Are you home, or are you still traveling around? All right. Hey, Bill, thanks for joining us, buddy. I really appreciate it. Been a great 48 years knowing you, buddy. Hey, we'll be back, folks. Stay tuned. We got a little wrap up, and we'll see what's going to happen on Monday.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the roadmap that we've been watching here with this. This was the equivalent to our Tuesday, Wednesday, Thursday, Friday. That means we should have a little quiet day on Monday with an up close, and then more down to this level right here, which is the 28th. This was the 11th of October to the 28th, okay, folks? That's 12 trading days. So if this was a 12th trading day here on Tuesday, that means we've got 2 weeks of movement down into this area here, which would take us right into the 21st to 22nd of August. What month is it? April. And then we have another rally and then another move down here. I don't know if it's going to continue following like this, folks, but my gosh, if it's working, why don't we try to use the darn thing? That's all I know. So that's what I'm watching. This is where we are right now today. You can see we had a big day, but the market came back really strong. All right, then, the next day had a real quiet inside day, and then boom, down it went. Watch for this on Monday, folks. Watch for this on Monday, watch for this on Tuesday, and then we'll see if it continues to hold up the way it's doing. And the first time that it doesn't, then by golly, that's it. Folks, compared to what's happening now to what's happening in 29 was a disaster. we went from 393, okay, down to 210. We gave back 60% of all the gains that we'd made. This is not happening. This is a normal correction, even though it's violent, 1,700, 1,800 points down in the Dow Jones. But that's not unusual. Remember when it was up 1,100 in one day, I said it's going to have a day very in the near future where it's going to do 1.618 of that, and that's what it's doing here today. Nothing to be afraid of, folks. They're just numbers. I want you all folks to live every day in an attitude of gratitude and do something nice for your neighbors and some poor folks that are around needing help, because we're all in this together.